In today's episode, we're going to be focusing on what you can do in 2023 to set yourself up for a profitable 2024 and beyond. We're going to be looking at these historical tendencies across cycles in a way that we can extract the practical nuggets and facilitate your investing strategy for Bitcoin into 2024 and beyond. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy macro content on Bitcoin, and let's dive right into it. So what's interesting about this current period, and that's the pre-halving period for Bitcoin, is that in the pre-halving year, that is 2019 and 2023, is that at this same point in the cycle, 200 days before the halving, we saw a relief rally. And that's something to really note because we're currently at these analogous price levels for Bitcoin. And what's interesting about that is that 31K maybe is a high risk buy. To buy at 31K right now is we're not really sure if we're going to see a push up. And in fact, looking back on history, we could actually see downside going forward. That was the case in 2015, but also in 2019. But the thing about after the halving, the same price level is going to be actually rather favorable, because even though 31K could see us still see some downside, 31K after the halving would actually see us go higher. So it's funny how the halving changes the value of a price point, because after the halving you can see that this red box, this post-halving resistance, continues to act as a resistance and point of rejection, but we actually then break this resistance and then enjoy post-halving parabolic continuation. And it's funny how the same price right now might not be a good buy right now because we might see further downside, but after the halving we'll see likely post-halving resistance before a confirmed uptrend into parabolic price continuation after the halving. So that's one thing to bear in mind, that this price point isn't as good as the same price point being a better re-entry later in the cycle after the halving. But of course, if we see downside here, then that's going to be fantastic bargain buying opportunity in preparation for that post-halving continuation. And that's where we talk about the second point, that when we look at the pre-halving macro higher low in 2019, we saw that this macro higher low was tested on 3 occasions, and we haven't yet revisited this higher low in this cycle, and we'd have to have a 27% retracement from current price levels to get us to this macro higher low. And the macro higher low will be around 20K. And what's interesting about that is that we at the same point in the cycle saw a relief rally to reject price. So we saw a new higher low, new lower high come in. And we could see at this same point in the cycle a new relief rally into a new lower high occur as well. So this 150-day period where we essentially saw the relief rally occur and then that macro higher low revisit occur in 2019, if we see the same 150-day period occur where this is going to be a new lower high, and then we see retracement going into the next 150 days, going into really late February 2024, so essentially a 27% retrace, this 150-day period will be pivotal to positioning yourself into Bitcoin at a discounted price in preparation for that post-halving parabolic continuation that we're all really waiting for. So step number 2 in this situation is that a 27% retrace from here could occur to revisit the macro higher low, which would be bargain buying territory. And as you can see here, we don't need a 62% retracement to get us to a macro higher low event. In fact, a 27% retrace would suffice to get us to 20K. And if we do get closer to this macro higher low, that will be a really good opportunity for the long run. And the third thing here is to really think about how could we potentially revisit that macro high low? Well, if we think about things in terms of the macro range here, with the macro range low at 15,500 being that major support and 31k being the range high resistance, essentially being the macro range that's analogous to the 2019 period, we'll notice that this higher low is one to watch out for going forward, because we actually never revisit the macro range low support. We could try and get close to it via a macro higher low, but it's unlikely that we'll get to that macro range low support in this cycle, even though we are seeing a very similar and familiar bearish fractal take place. And it's this bearish fractal that, if it plays out, we're going to see price drop lower in this macro range, but not actually to touch the 15,500 macro range low. Instead, we're probably going to see a macro higher low of some sort, probably something along the lines of what we saw in 2019 replicate in the future, and that's 27% down from current price levels. So that's the third thing, that we could see this bearish fractal get us closer and lower inside this macro range, but not actually to revisit the bear market range low area, but instead to see that macro higher low get facilitated. And step number 4 is the fact that after the halving, we tend to see 518 days or 546 days after the halving before we see a new bull market peak. So if we were to think of a new bull market peak 518 days to 546 days after the 2024 April halving, then we'd see a price peak, a new all-time high, at around mid-September 2025 to mid-October 2025. Really does depend. It's only a month apart, but generally speaking, we have 500 plus days of uptrending price action after the halving. So really important to position yourself after the halving accordingly, so that you can make the most of this post-halving parabolic price action to new all-time highs and enjoy that for 500 days plus before de-risking and selling before we finally peak in the bull market. So that's about it. Subscribe to the channel and feel free to check out the video in the top right hand corner for more videos. Like this video if you enjoy these videos, and I'll speak to you in the next one. Speak to you soon.